Ed Grebeck is a strategist in the global debt markets and an expert in the bond, insurance, and rating agency industries. He's given one of the earliest warnings to investors of the global financial crisis, and he's back with us to talk more about political and governance issues with municipal bonds, namely what's been happening recently with sanctuary cities and the federal government. Thanks very much for coming again and talking about sanctuary cities. One of the governance risks that you highlighted, I remember in our last segment, you mentioned that they're not found in the issuer's official statement, and be great to know more about, one, what a sanctuary city actually is, and two, why you consider its debt to be more risky than coming from an issuer that is a non-sanctuary city.
A sanctuary city is a state or municipal jurisdiction that basically does not cooperate with the federal government in their efforts to enforce immigration laws. For example, they won't report the presence of illegal aliens. If illegal aliens are released from prison, they will not inform the federal government, the DHS, Department of Homeland Security, that they are being released, and that causes major problems. The first one is basically the budget problems of illegal aliens in general. I mean, how many of them are there? How many are getting benefits from sanctuary cities? These are benefits that should actually go to U.S. citizens, but they're being diverted to illegal aliens. And equally important are the costs of crime committed by several illegal aliens. The biggest cost there is death. There are several different examples you can go through in the press. Recently, a Mrs. Fuertes in Queens was murdered by an illegal alien, for example. But in terms of what are the costs of crime, well, one aggravated crime, one death is one too many. And why is that risky? Well, I think if you look at the economics of all this, we don't really have an idea, a good idea, of how much illegal aliens are costing each jurisdiction in terms of like benefits that they qualify for, in terms of like educational benefits such as in-state college tuition for certain sanctuary states versus you coming from another state and paying the non-resident tuition fees. All sorts of different advantages like that in effect discriminate against U.S. citizens. And the cost of that, I think, have not been addressed, from what I can see, by the rating agencies, and in terms of their ratings. Yet, the fact of the ratings, of municipal ratings, 95% of them approximately are rated investment grade. Many AA and AAA that are sanctuary cities. I can't see how they can justify that.
It's fascinating. It seems to be a huge underlying risk not being captured by the rating agencies, but one that it seems the federal government may have. I think they have addressed this pretty recently. But I hope that you'll come back with us and you'll explore more about how maybe these issues can be resolved, or can they be resolved?
I'll try my best.
That'd be terrific. Really, really terrific. Thanks again for coming, Ed. Really always great to have you here. Thanks so much.
Thank you very much, Steven.
Global debt strategist, CEO of Tempus Advisors, will come back with us again to talk about the issues of sanctuary cities. Join us next time as we explore some recent actions towards resolving the issues about sanctuary cities, which provide challenges and opportunities for municipal bond investors. In the meantime, visit Traders Academy for a complete educational course about municipal bonds, and use the Global Bond Scanner through the IBKR website or in the IBKR Trader Workstation to locate munis available to trade in the secondary market, along with U.S. Treasuries, corporate bonds, non-U.S. sovereign debt, and more. I'm Steven Levine with Interactive Brokers.